Moonshot's Kimi K3 model has sent ripples through Silicon Valley and Washington, but the significance, according to our next guest, isn't about Chinese versus US AI supremacy. It's about credible, cheaper alternatives that drive AI adoption. Karen McCormick is the Chief Investment Officer at Beringea, a firm investing in early to growth stages across the US and Europe. Very interesting perspective. Just bring me your ideas on this. You know, the impact of Kimi K3 being open weight, how the economics of it add up. It's been constantly discussed for a week now.
Yeah, I guess it's worth framing a little bit of what we do, and thank you for the introduction. But as you said, we do early growth capital. So we aren't necessarily looking for shoot the lights out $10 billion type return businesses. We're looking for growth businesses that get to real profitability. And that's what we focus on. So for us, the capital efficiency of the businesses matter quite a bit. And that feeds into our European and US thesis, which I can come on to. But I guess the net result for us is that as frontier models become more commoditized or more widely available and cheaper to use, it's very helpful to our portfolio companies in the whole, because it means that it's more capital efficient to be able to launch those businesses. And to be blunt, it also puts pressure on keeping the cost of the US frontier models down.
So this ties together your strategy with everything in the news cycle. The conclusion when Kimi K3 hit is that it was the frontier labs that were at risk, but net, this was good for AI. Now in Europe, the capital environment's completely different, and those founders run leaner businesses. Respond to all of that, you know, why we're seeing a Chinese startup like Moonshot make some progress. It gets backing, of course, from national funds, but that has been the sort of debate.
It is an interesting one, and in part it does feed into kind of our European thesis, because we do see often European businesses or even US businesses that aren't specifically Valley-based have to start to grow and thrive on less available capital. So if you don't have the huge amounts of capital rounds that a lot of the Valley companies are raising, you have to do more with less. And so the thesis in total is that the more these frontier businesses are becoming commoditized or cheaper or more widely available or open sourced, the better it is for the businesses. And it helps a lot, especially with our European portfolio, where capital isn't as freely available as it might be in the US. And we've genuinely seen higher growth, lower costs as a result of using models, and different models are right for different types of activities. So we might still be looking at using a Claude or a Fable 5 where it's really important deep tech work that we need to be doing, whereas DeepSeek or Moonshot might do more than a perfectly adequate job for some of the day-to-day tasks. So we have really seen the cost of launching these businesses start to decline, and even where the businesses are already established. So we have one business called Edited, which is in traditionally the SaaS space. They've rebuilt their entire software using AI, and the development cost has been so much lower, and the launch has been so much faster, with the reception from the market being so much better.
Karen, you're in the camp that agrees AI will be transformational. You just gave the SaaS example, but you say that we're in the messy. You say we're in the messy middle.
Yeah.
What do you mean by that?
So, I mean, we've been through so many different market cycles, and Beringea as an entity has been around for 30 years. I've been doing this for 20 years, and in the corporate world for 30. We see technology cycles. This isn't new for us. I mean, mobile revolution, moved to cloud, now we're in AI. We're still trying to figure out how things are going to work. So there are going to be pain points, and I feel, I mean, my own children, for example, are going to find the job market may be difficult. There are going to be pain points as we figure out how this works, but I do think it's a net positive all around. And I also would say I feel like the whole idea of like SaaS apocalypse, like SaaS businesses are all going to suffer and not be in existence anymore, it really doesn't hold water, because what we're seeing is a lot of SaaS businesses are just becoming, they're really just software businesses, and whatever they're using, whether it's cloud computing or AI tools, they will continue to thrive as long as they move with the market. If you're standing still, then you probably have a problem. But I think most of the software businesses are adopting AI very quickly. One of the things I think we are seeing is that AI is moving so fast that what was revolutionary 2 or 3 years ago is actually now a bit dated. So you might have had a moat, so to speak, 2 or 3 years ago based on your use of AI. But for the CEOs and for the small companies, they're having to move so fast to make sure that that moat is sustainable. And we even see that in the large public markets. I mean, if we think about the constitution of the top 10 holdings in the public markets, in the last couple of weeks, those have been churning. And they've been churning because we're looking at businesses on a reactionary basis where we thought they had a solid moat, and then something happens over here and we question whether that moat is really there. And then something happens over here and the guy who took the top 10 spot is now moving down again. So I think a lot of it is this market is moving so fast, trying to determine what your moat is and how long that's sustainable for is tricky.
Karen McCormick, Chief Investment Officer at Beringea. We will have you back, and I think next time there's a conversation to be had about European defence tech as well. Making
Absolutely.
First appearance on the show. Thank you so much.